Is President Trump going to tank the stock market again with this fresh round of tariffs, or will he back off before the August 1st deadline and allow this bull market to continue to run? I'm going to show you my expectations. I'll show you what happened the last time the situation presented itself and how I am rebalancing my retirement accounts to take advantage of that. So the last 6 months has been extremely volatile. In fact, one of the most volatile periods of stock market history that I've ever seen, second only to the 2020 COVID situation and the 2008 financial crisis. Sweeping tariffs in February caused shock to the stock market, which fell 20 to 25% in just 2 months. Once that tariff situation was somewhat put to bed and we realized that it was more of investors realized it was more of a negotiating tool and not something likely to be put into effect on a large scale, the stock market has come ripping back in a historic rally. And as you can see, as of today, we are up here again making new all-time highs. So is this going to be the same? Will this round of tariffs again be exposed as nothing more than a negotiating tactic that Trump didn't plan to follow through with? Well, I don't think so, and here is why. Now, I'm not sure if you've heard about this, but traders have this new phrase where they call it the taco trade, and it's TACO, which stands for Trump always chickens out. And because that's the precedent he's set. He's made some pretty big threats, monstrous tariffs, and when they approach the deadline, he either says, hey, we had a good talk, I'll extend it 30 days, or I've changed my mind, I'm going to be nicer. And so it's kind of created this boy who cried wolf situation where Wall Street no longer believes he's going to follow through with those tactics. And then, as you can see, the market is pretty much just disregarding what he says, and letting it rip into new highs. But I don't think he's going to back down this time, because here's the reason. Now, I'm no psychologist, but I've studied President Trump pretty closely over the last 10 years, and one thing I think we can all agree on is he's a very prideful man. And for better or worse, he does not like being humiliated, degraded, talked down to. And when this became a public situation, it created two things. First, I believe deep down it embarrassed Trump, and he wants to show people that he will, in fact, follow through with his threats and hold these tariffs if these countries do not come to the negotiating table and come strong. Secondly, he's probably realizing that if traders see this, so do world leaders. And Trump has always led from a position of strength, and the last thing he wants is for other countries to go to the exception, yeah, he's all talk, he's not going to follow through with it. So my expectation is he absolutely follows through with these tariffs. A few countries that do not come to the table by August 1st will face those tariffs. I don't think it's going to be a massive shake to the market like we saw back in February and March, maybe a few percent, 4 or 5% pullback, but this also creates an opportunity. You see, we're all familiar with the S&P 500 and the NASDAQ, but the average investor doesn't pay much attention to the Russell 2000. It's another index representing 2,000 stocks, but these are small cap stocks. So not penny stocks, but companies that are 300, 500 million, maybe $1 billion, not $1 trillion like Microsoft and Nvidia. And this index, and I'll put up a chart here of both of them, as you can see, the Russell is down here in green, the ticker is IWM, and the S&P is up here in white, and the Russell is very much trailing the larger index. So in the last 1 year, the S&P is up 12%, the Russell's almost up, it's less than 1%. And so it has some ground to catch up, and this is why it could happen now. You see, smaller companies tend to do the bulk of their sales domestically. If you're a $200 or $300 million company, that means you're probably doing, depending on the industry, $20, $30, $40 million a year worth of sales. And the bulk of those sales you're selling here in the United States. You're not a big international conglomerate. Nvidia, however, is worth $4 trillion. And the only way you're worth 2, 3, 4 trillion is if you're doing business like they are in India and Russia and South America and the Middle East and Europe and Australia and all over the world. So those companies, those larger companies that do a lot of their business overseas, are much more sensitive to those types of tariffs. And of course, the retaliatory tariffs that come on the back side of that. But the smaller, more domestic companies don't. In fact, tariffs often help those companies because now the competition they were facing from Mexico or Vietnam or wherever else now has these massive tariffs, and they've suddenly become very competitive, and now they're going to get even more sales, even more profits. Plus, the last time this played out, the Russell was the big winner. Let's scroll this chart back a little bit. I'm going to blow it up so you can see the time scale there across the bottom. This is present day. But what we're seeing right now in the market is almost a mirror image of what happened in 2020. In 2020, when COVID came ripping through, the stock market just collapsed. I mean, it fell 35% in a month. So a big, completely unexpected black swan event. In this case, it was a global pandemic. This year, it was an international trade war. Once we realized, okay, it's not going to be permanent, it's not as bad as we thought, we can still operate, the market came ripping back and came back into new high territory in 3 or 4 months, which then powered a huge bull market all the way up to 2022. So it's the exact same situation we're facing today. Big shock event, market comes back very quickly, and then continues running for another year to year and a half. But let's look at what ran the most. If we link up these scales here to right before the COVID drop, and in fact from the COVID lows, look at the difference. Let's just take it from like April to April. Or March, where is it? I'm just going to try to get 1 year, and I got to sync these percentages up. There we go. So look at the difference. The S&P 500 gained 63%, an enormous return for 12 months. But the Russell gained 107, nearly double what the S&P gave. And so, as investors, we like to find precedent. We like to look for the last time some of those situations have happened and see how it played out again. So if I'm a betting man, which I am as a trader, following the recovery, I want to bet on smaller, more American stocks, especially in a tariff situation. So what I've done to be proactive is the percentage of my retirement account that was indexed, meaning it's just holding SPY, which is the S&P 500 index fund. I sold that and put all those dollars into IWM, which is the Russell 2000 ETF. It is still a basket of 2,000. Well, it's 2,000 stocks versus 500. So it's still a big basket of stocks. You're not risking on any one. They're all U.S. companies, but they're smaller companies that do more of their business here domestically. And I believe it is going to outperform the general markets over the next 6, potentially 12 months. And so that's the action I'm taking. Do with this information what you will, but I hope it helps. So that's my take on the upcoming tariff deadline and my plans to get in front of it and protect and potentially grow my portfolio during it. Now, if you like these tips, do me a favor, click the subscribe button down there in the bottom right. Subscribe to the channel. That way you will see these videos as I post them. Be sure to like this video as well. Apparently it helps the algorithm. I don't know.